Hello traders, Damien here. I wanted to make this little video to answer a question from the thread and to also point out the reasons for my entry. I also want to remind everyone about the live stream on Tuesday around 9:15 a.m. Eastern Standard Time. I'll get on live and we'll do it like we usually do. My goal is to focus more on the short-term order flow, which is going to give us more frequency of trades, and it's going to give us the ability to rack up some points and to be more active. That alone is also a double-edged sword, as the short-term order flow can be more difficult to trade. But I wanted to show all of you the diversity of the system, and what I am showing you is how to read the chart with accuracy. And if you can read the chart with accuracy, then you give yourself options to choose which order flow you want to trade that day, which order flow you want to trade in general, and what setups you want to take and which ones you're looking to pass up on. Knowledge is power, but knowledge is also it could also be a source of problem. Sometimes we read too much into certain situations and we end up not taking trades. So in order for the probabilities to work out, and I don't do this myself, so I'm not going to sit here and tell you that I take every setup. I don't. But when you don't do that, you also need to understand that that also affects the expectancy. You could have a system that captures 70% accuracy based on every setup, but if you're not taking every setup, then it's impossible. You could be more or less, but you can't blame the system. You can only blame yourself for not taking all of the setups that fit your rule set. Okay, but that's not the topic of this discussion, and we're here to address this. So it says here, thanks Mr. Pip for that trade. I have a question which I seem to suffer a lot from. How do you know what you should trade at point marked with 3 but not 1 or 2? Weak signals, question mark, or false weakness signals, question mark. Not necessarily. One, this happens outside of my trading hours, but I will go through this with you so that you can understand what it is that you're looking at. The very first thing you need to understand before you even take a trade is, what is it that you're trading? Are you trading a correction? Are you trading a continuation? That is a very important detail that you need to understand ahead of time. Why? Because if you're trading a correction, your profit target, okay, is going to be smaller than if you're trading a continuation. If you're trading a correction, you need to be very aware of the structure to your left that may contain price, so that you don't have a false expectation, meaning that you expect to get 50, 60 points out of that, when in all actuality you're lucky if you're even going to get 10. Okay, so you must understand what you're trading. Am I trading a correction? Am I trading a continuation? Am I trading a pattern completion? What is it that I am trading? What case did I build before my entry? And if you didn't build a case before your entry, well, then that's bad. It's very bad. Okay, so it's always important to understand the context and what is it that you're trading. You had to build a case to decide to get in there. What did that case consist of? Pattern completion? Nothing more than just some structure? I mean, whatever those reasons are, you have to understand what you're trading. Okay, now we're going to move into my chart. I highlighted these areas 1 and 2 on my chart. I didn't highlight 3 because it's my entry. Okay, so let me bring this out. We have my chart here. Okay, so right off the bat, we have price moving down here. Okay, we have good volume on the sellers. Okay, price found support here, came up here, bears came in, could not cover, good rotation to the upside, and price did what? Broke structure here, made a new structure high. Okay, this is the market telling you, I want to go up. Okay, so now you need to consider, okay, what are the forces or what are the elements are here that if I do decide to get short here, which there's nothing wrong with that, okay, but you have to understand what it is that you're trading. Okay, one, this is a 2:46 my time in the morning. There is no way in hell I'm here. Okay, trading. My hours of operation are very consistent and very clear all the time. Okay, but if you happen to be trading here, you need to tell yourself, okay, what am I trading? Okay, I am trading a situation where I do have an ABCD pattern that completed here. Now you didn't have a great rotation here, so I wouldn't have gone into this. I also see price increase momentum, increase projection, increase volume. So there's a lot of strength here moving price up here. So this all lead me to believe that I may not get a very good correction here, and that my expectation would be a higher low followed by a new structural high. Okay, but if I did get short here for any reasons, there is a very clear short-term ABCD pattern here. Break a structure to the upside. I'm trading a correction. I'm not trading a move to the downside. If that ends up happening, that's great. Let your trail capture that. Okay, but your goal here is to trade nothing more than a particular ABCD pattern to the downside here, where wherever you decided to get short at, okay, this was your break even, this was your profit target. Okay, you had structure here. Okay, this is the strongest structure area. We have price trying to find support here, find support here, find a good rotation here. A lot of very good bold sign here that says there are buyers here, there are buyers here. Okay, not only were there buyers here, but you got continuation. Okay, on this way down, the buyers bought into this very aggressively with good volume. Okay, this also supports the theory of I need to be taking profit here if I'm short here. Okay, because you have to understand that you're trading a correction. You're trading a short-term or smaller-term pattern. This is nothing more than a correction here. That is your expectation. Okay, so you have to understand that going into this. Okay, now what was your expectation from that? A new structure high. Okay, and perhaps a weak new structure high initially on the immediate scale, because what? You corrected 100% of this swing. Okay, but you had great volume candles here that were fought off by the buyers. So now when you had the bears come in here and another good rotation, this was a good area here to look for the long. Okay, but not to get short here. Why would I not get short here? Okay, while we have great volume pushing price up here, we have the bears unable to move price down, unable to close below this structure area. We have good volume buying going up. So there is not a viable selling opportunity for me here at all. Plus my expectations for a new structure high. Okay, so this is not any reasons to look for short here. Okay, now moving forward and why I took this trade. Why did I give myself? Why was I looking for a short here? Well, we have price moving up here. The volume died down here. See that? Good volume on both sides. Sellers came in here, nothing. The volume died down here. What does that mean? Well, it means that the sellers weren't engaged here. When you see small candles, those are buying and selling transactions. So because some of them cancel each other out, they produce smaller candles. This was overwhelmingly selling transactions. This was overwhelmingly buying transactions. These two candles, when you compare and contrast each other, they cancel each other out. They're meaningless. It's when you have complete imbalance like this, okay, that it's meaningful. But when you have strong candle here, strong candle there, it cancels each other out. Strong candle there, strong candle there, it cancels each other out. Okay, here cancels each other out. However, when you compare and contrast, they cancel each other out. But what does that mean from the selling standpoint? It just erased it. It means nothing. Good rotation to the upside. Where's the strength building to the upside? What's the expectation to the upside? Okay, like here. Okay, we have this candle versus this candle. You say, wow, this is a great rotation. What does it mean? It means very little, okay, in the grand scheme of things because of this, okay, because of the expectation. But let's get back here. So we have the smaller candles, right? What does that tell you? That there's sellers in this area here, okay? And then price came back, the buyers were unable to continue on here, and the sellers came in to produce a correction back to an area structure as you would expect, okay? This is 8:18, still my time. I'm not even here. I got to my computer like at 9:20 something today. Anyway, I got to my computer 9:20. something. It was somewhere, price was somewhere around here where I got it to my computer. Anyway, some of the same things here. Sellers came in here, they weren't able to convert. The buyers rotated nicely here, and then we have what? Weakness. We have weakness into an area that price has done what? Sold off very well. We sold off well, sold off very well, attempted to sell off well, sold off well. So this area up here, what? It's an area of interest to sell. Okay. We also don't have good volume going up. Why don't we have good volume going up? Because there's sellers here too. These candles have a lot of selling going on in them as well. And then when the buyers came in, when the sellers came in, they didn't produce a good rotation candle or anything of that matter, for that matter. But the sellers came in here, and as you can see, it started out weak and the candles started growing in volume. Okay, so there's strengthening going on here. The buyers tried to come in, they could not counter that. The sellers came in again. The buyers tried to come in again, and they were even less successful. So on a small term scale here, what you're seeing here is you're seeing strength increasing, buying decreasing, buying decrease. You see all the selling pressure. There was an attempt to buy here, but it was so weak that they got overwhelmed. And all these candles. So you have one good candle here that was just completely flattened out by this. Okay, so one of the things that I always tell you guys is that what you want to see in taking a trade is you want to see price start out strong and progressively get weaker as it gets into your area of interest. What was my area of interest? My area of interest was this zone right here. Why? Because I have selling here, I have an attempt to sell here, I had selling here, I had another attempt to sell here. So this whole zone here was my area of interest. That's why I did not chase this one. That's why I did not chase this one. Okay, because my area of interest was deeper. My expectation is still, for the very least, a retest of the high or a weak new structure high, because we have the last established was a new structure high. We had a 100% correction, so a new structure high, although unreasonable for me to expect, especially with the volume building on the sellers and the buying weakening, okay, I still have to understand that my expectation is still for a retest of the high or a weak new structure high, and I have to be cautious as to where I decide to take on the risk. Okay, so as price continues to climb here, okay, and we see that we have a lot of selling pressure in all of these candles as they all try to trade lower below their open, not very strong. Okay, so once that occurred, we had sellers here. They got pushed back a little bit, but the buyers were not able to really capitalize in producing any more decision candles. Okay, so this candle, although not a traditional rotation that I do like to see, because it did trade above its open here, this candle very quickly and in a hurry got bearish. Okay, and that was the surge of energy that I do like to see in my area of interest. So I took that trade, okay, and then I looked for a 1-to-1 to the downside. Okay, at which point, once I got down here once I got past this area, I started getting aggressive because of the buyers area. All of this areas could be act as buying. I'll show you here. We have this area here, resistance, support. So it was imperative for me to give the market some room, get price past this area, and then get aggressive, as this whole zone here could act as support. So once price got to this, and I see the good volume candles here, and I see these are decision candles, I started trailing on decision candles, and then down here I got really aggressive. And after this candle closed, I just moved my stop right there because of all of this buying in this area. And I had already extended a 1-to-1. So I just got really aggressive there as an area that would most likely find some sort of support. Okay, so I ended up taking the 46 points. And then as price came back up, I was looking for the selling. I was looking to sell again. somewhere in this area, ideally somewhere around closer to the 600 area, where where they're selling was stronger. Okay, but we just didn't see that. And what did we see? We see the volume increasing strength, volume increasing. So we had weakening turning into strength. So that disregarded completely for me the interest in going short. Okay, then once price got up here, I see that this is an area that the sellers were interested in selling. I see the volume coming in, but because I see the new structure high that was formed here, okay, I expected a somewhat of a deeper correction, and I also understood that I may not get that because of the volume and strength increasing here towards a later part of this swing. Okay, so now I'm looking at a correction, okay, and looking to participate in the long. I see good volume here, and I see good volume on the buying side here. Should that exist here? There should not be good volume here, because this is an area of an area of supply, and an area of supply should find stronger selling than buying. So whatever the sellers were trying to throw in here, okay, the buyers were able to take back. Okay, but because of that, I said that the 600 will probably hold, but it does not justify an area for me where I am willing to take on risk. Why? Because this area has sold off. There are people, getting short here. There's also people getting long here. Okay, I don't have room to protect. My stop has to be down here. This is an area of an area of supply. So I need to be cautious of that. I need to be able to protect my trade. And if I can't protect my trade and I don't have the right risk profile for my trade, I can't justify taking on that risk. Okay, so then this was a great rotation for me that I was not willing to accept the risk, as I'm trading right into an area people are trying to get short. People have been able to sell before, even though my expectation is for this market to make a new structure high at this point. My expectation also puts me at a somewhat of a deeper possible correction. Okay, and I need to give myself more room. So when the buyers came in here with some degree of weakness and the sellers came in here strongly, this rotation was very inviting for a couple of reasons. Okay, one, we drill down into the micro or short-term order flow, and we see that price had made a weak new structure high here, and then made a new structure low, right, followed by a lower high and another new structure low, followed by a lower high and a new structure low again. But what's happening within this short-term price action that would lead us to believe that the buyers are too strong or gaining strength and the sellers are losing strength, and where we should look to position ourselves or disregard trading in a direction entirely. One is, we see the volume here is not consistent, right? We have buying candles within selling candles, and then we have the same here. Okay, so this doesn't tell us anything, but now here this does. Okay, we have very good volume. We have decisions getting stronger. We made a weak new structure low. We should have we should have a deeper correction followed by a strong projection. Okay, so we do have that starting out strong, gaining weaker that we like to see. Okay, and we had sort of like a mid to slightly deep correction here, which was also consistent with what we would expect. And then we would expect the rotation into an area of structure. Look at the structure in this area, look across, and then we would expect to see a stronger move to the downside. We do have great volume candles to the downside here, but you see the projection. Okay, it's just decreasing. Momentum on the buying is also decreasing at this moment here. Okay, so I did not feel comfortable taking this on, even though it was a beautiful rotation, because if I was unwilling to take this one because the risk reward sucked and I didn't have room to protect, I have even pretty much the same situation here. But I'm also seeing the momentum in the very short term on the buyers is also weak. Okay, now things turned here, and that's okay, as price made a 100% correction, okay, which was weakness on the bears, and then price came in and the buyers immediately came in to defend that territory. Okay, So I did not feel comfortable. I felt that I was going to get that deeper correction that I wanted to see, and that I would be interested in taking on the risk in this zone here. And this is why I told you guys on the thread that somewhere between 77 and 80, or 75 and 80, I don't remember exactly now, is where I will be looking more interested in taking on the risk. The market had already spoken here and wanted to go higher. Okay, the bear should have never allowed that. The bear should have never allowed this strength here. Okay, so this was just desperation. Okay, and a lot of trap traders. Okay, so now the market spoke again up here. Okay, and the market pushed on down here, and we have that nice strength turning into weakness. Okay, and then we don't have a great rotation, which is why I didn't take it. And then we see here that we have selling going on here and buying. Where's the volume, right? Now the sellers are coming in again. Okay, and then we have some of that battling, but there's a lot of weakness here. Okay, so there's weakness here because there's selling going on here. So at any point in time here, we could see the sellers come in and push price in a particular direction, just like we could see the buyers looking to defend this area right here. And if I was going to be a buyer or look to buy, as I should be looking to buy, I would be more inclined to buying at these lower levels in the 620s than I would be at 630. It gives myself a little more room. It allows me the opportunity to be a little more flexible and give myself some more options if the sellers do decide to defend these areas up here more aggressively. Okay, that was a short video. I hope it had value. Again, tune in next Tuesday on the live stream, as we will be looking to capitalize more on the immediate or shorter term order flow to give ourselves more frequency. There was just not much opportunities in here to take. This was an unexpected move to the upside. I did not expect this to happen, but we did not get the order flow that we'd like to see on a correction to justify taking on the shorts. And because of the strength involved, everything that I've discussed to you in this video, it put me against looking for anything short up here. Okay, but we also on the same side missed this opportunity, but only because we also had some conflicting information, and we did have volume, and we did have arguments to say that both sides were looking to capitalize, which was true, but the expectation was for price to go higher, and that happens more often than not, and that's why price ended up going higher. Okay, again, I hope that had value. I hope it was clear, and remember to tune in next Tuesday. Take care. Good trading.